What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 23rd of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's Macro Monday, we're going to be answering a big question. Should you be chasing the Bitcoin rally that we've been seeing? After another 7.5% move back on Friday and holding the majority of those gains at around $23,000, Bitcoin is at its highest level since August 19th. Is it worth chasing the trade? Where could we go to? And on top of that, is this a sustained beginning to the next bull market? We're going to be diving into that and much more as we go throughout the video. If you like this video, consider dropping a like, consider subscribing if you haven't already. Those are the two best ways you guys can support the channel. If you enjoy my rambling, and let's go ahead and kick things off. So I want to go ahead and just try to talk about where we've come from so far. We're up about 51% here from the bottom to the recent top, and this is better than the past two previous relief rallies. It's definitely historically significant. And on top of that, we were able to see one of the key things we wanted to see going forward that could potentially start to confirm, or at least be the first step in confirming that we found a bottom. And that's turning previous bear market indicators like the 200-day or the 200-day EMA into new support rather than treating it as resistance as it was in the past. This is definitely a great first step here. And seeing the kind of percentage gains we've had, the rigorous momentum and price is definitely a telling sign that optimism has arrived to the crypto market to some degree. The question is whether or not it can remain. And we need to start asking ourselves fundamentally if this is real fundamental long-term buying or some kind of degree of speculation or manipulation. Now, hear me out on this, okay? I'm again open to the idea here we could climb up towards 24, 25K, right around the range we had closed our positions back in August before the Fed had made their comments. But I want to go ahead and talk about why I'm not really eager yet to FOMO into this. First off, the important thing we want to see here, another one of our confirmation signs that we're out of the bear market, is getting above the next major bear market indicator, and that's the 200 week. Right around here at $25,000. We have been suspended below the 200 week for the longest period of time in Bitcoin's history, all right, continuously. And until we can actually get above that metric and be able to turn it into support, I'm not too eager to chase the trade, especially considering how much more expensive Bitcoin has gotten here within this period of time, right? Until I actually see that the bulls have the ability to hold us at a price range we haven't been at really since back in August, and turn that indicator into new support once again, rather than treat it as resistance, like we're seeing with the NASDAQ, like we're seeing with some of the indices in the equity markets. That will be my telltale sign. If they can do that, then it's definitely time to start considering having some exposure to Bitcoin. On the other hand, if we get shot down there, I expect the resistance after some consolidation around that range to be quite furious. And here's why I'm mainly not chasing the trade here. There are a couple key charts and metrics we got to dive into. First off, we got Bookmap here. Now, taking a look at the multi-book feature over the last week, while we have seen Bitcoin's price appreciating, notice the market outflow, generally speaking, outside of these kind of short moves in the market, have been overwhelmingly red. So we're seeing constantly that the cumulative volume delta is still on a weekly time frame. The market order outflows on the real spot markets, the spot markets at the end of the day that are really going to serve as that foundation to drive price higher or lower in the long run, is still in the negative, minus 5,000 for the CVD here over the last week. And you can see that it is reflecting those upward moves. The CVD goes up more, right? Becomes less negative as we have that market order flow coming in. But generally speaking, we're still seeing net market outflows. So what's really going on here? What is really taking in a lot of this upward move, right? And what we're seeing here, in my opinion, is the typical spot to futures manipulation that goes on time and time again. And you guys know on my channel, I don't usually shout the word manipulation too much. Again, to be honest, it's just the game of markets here. If we take a look at the Binance futures volume, which is again not real Bitcoin trading, but rather futures contracts, you can see that the CVD paints a very different picture. A 26,000 point CVD in the green. And if you take a look across the chart, it's practically all green here. There's some red dots, of course, but generally speaking, you're starting to see a lot of that upward pressure. Now, the one thing I really want to make clear here is what's going on. Well, what we've seen time and time again is that when markets, especially the spot markets, are thinly traded, the exchanges have a means, as well as large key investors and whales in the space, to be able to lead towards these short-term bursts of moves to the downside or the upside, getting people really excited. And then what happens is people start setting in leveraged longs or leveraged shorts, like how a lot of people were leveraged short in November. We never talked about shorting here on the channel, even though we've again called for long-term a continued decline. We know the game in crypto markets. We know how these exchanges have all the data on your positions, especially those of you who are leveraged in your positions. And they know exactly what price they need to get priced to in order to liquidate you and take all of that money. Essentially speaking, what I'm saying is that a lot of these exchanges that I think are either, basically desperate for new deposits or are desperate to be able to fill in any holes that they may have in their balance sheets, are doing everything in their power to liquidate their users so that any deposits that come in into the exchange where people are thinking they're going to build some position in something, while on paper they've got that position, the exchange knows that a certain percentage of those users are going to lose it all, getting liquidated in the trade. This is a really unknown secret to a lot of exchanges, which is that while they offer these futures and derivatives contracts and it sounds all great, they know predictably that a certain amount of users are going to use too much leverage, and if they can get priced to a certain range using enough market order flow pressure in a short period of time, they can start to liquidate users and make a big buck. That's another big thing that you guys can access here, not just multi-book and some of the unique price range and market order flow data metrics like the Binance futures contracts, but you guys can also utilize Bookmap's liquidation tool. I highly recommend you guys check out Bookmap at the link down below and get 20% off on the first month. But again, I highly recommend it as a tool because of the fact that you can start to see this information beyond price. Sometimes when we just take a look at price, it's easy to get the FOMO. But if you take a look really at the Bitcoin index, which is pulling volume from a lot of the major exchanges, look at the kind of volume that is behind these moves. Not too much whatsoever, right? And this can easily happen when there isn't that ask side support or resistance, right? So again, when there's not that kind of ask resistance on the order book where the market order flow has to clear through it, as we can see again by just taking a look at Bookmap, right? There really isn't too much ask side support here, ask side resistance within the trade. So these exchanges can just clear through it really quickly. On the other hand, when you got bids down here at this like $12,000 range, that's when you can start to not be able to do that same kind of manipulation. So again, don't chase all of these rallies, guys. There's been plenty of relief rallies along the way. Wait for the kind of signs that are going to give you the confidence that this trend is really ready to soar higher. It's not a difference of buying it here at 19K or 25K. It's about knowing whether or not there's vital signs that showcase that we're ready to kick off the next trend and start off the next bull market. Again, if we take a look at our other charts, what we're going to be diving into within this video, I don't think we're there just yet. Okay, so let's go ahead and talk about a couple of these. First off, one thing that has to do with crypto markets is the ETH to BTC ratio. Now, I got to tell you guys, as we're talking about with these moving averages, the 200-day and the 200-week, these are significant indicators when it comes to talking about the momentum and the certain emotional states of markets. Now, we understand that Bitcoin is definitely looking quite euphoric, and while Ethereum, yes, is climbing up in dollar value, what I find very important to focus on is how Ethereum against Bitcoin has started to show signs of weakness. We've gone down, if we take it here, from just the relative top back in January. We've come down around 8% and are now trending down below the 200-day for Ethereum. This is not a good sign. And the reason why this isn't a good sign is because if we are seeing the kind of euphoric risk-taking that usually takes place as we formulated a bottom, that signal that risk is on in the market and that we're heading up higher, we should be expecting, especially after all the hype around EIP 1559, all the hype around the move to proof of stake for Ethereum, that now with its better monetary policy, it should be moving higher here. But we are now trending below the 200-day. Yet again, flatlining over the broader trend since back in May of 2021. And this again plays into my thesis here that we're likely going to be seeing Ethereum move down towards a lower ETH to BTC ratio before we really find that bottom, before we really start to see an optimistic trade setup for Ethereum. All right. So this again signals to me that something is up here. Now I know some people have focused in on some of the different plays here in the market. Probably about 25% of the cryptocurrencies have outpaced Bitcoin here over the past few weeks, and some have been in double-digit returns like Aptos, Axie Infinity, Hedera, Optimism, Steppen, Kava, some of these different plays out there. And while we definitely like plays like Kava, there's also some really exciting plays out there in those other altcoins that we listed as well. The key thing here I really want to emphasize is whether or not, one, would have bought those trades, and on top of that as well, that they are far and few. They are the 25% best performers here. Whereas a lot of other cryptocurrencies, if we just scroll through over the last 7 days, have practically made no returns. Right? Many of them potentially even being in the red. This is not the kind of sign that we are in a bottom. So if you guys want to chase these trades, right, if you want to do some short-term trading, hey, that's fine by me, right? But again, the vast majority of you here, right, the vast majority here on this channel, which I really try to focus on, who are like me, who are trying to trade the broader cycles, I'm not seeing that kind of optimism returning. We know that when the bull market comes back, the vast majority of altcoins as well are moving in a cyclical nature together, and they tend to be trending much higher. Last thing here that I think really we got to talk about within crypto is a lack of continued capitulation. Now, capitulation can take some time. It comes in various forms. Again, took multiple months after Celsius, Voyager, and the likes of a lot of the major companies in the crypto space, after they went under, for FTX to expose itself, or eventually get to a point where there was enough withdrawals in the exchange where we started to see the company go under, where it had a hole in its balance sheet. And now we know that Gemini, as well as Genesis and a whole range of other players, are already going through public bankruptcy. The question is, how many other players have yet to fall just yet? More specifically, even if all of the exchanges, maybe the emperor has no clothing, we know about which exchanges are vulnerable and now they've been exposed. The key thing we got to talk about is the Bitcoin miner hash rate. We are back practically to the highs back in November of this year, and still well beyond the kind of range we saw for the hash rate back during April of 2021 or going here in November 2021. So I would expect at a minimum that we're going to see some kind of decent decline from this range, and it's going to be sustained because of just how brutal this Bitcoin bear market has been. The returns weren't as strong in the last bull market, and we've been suspended below that 200-week for a long period of time. This crushes a lot of the margins for some of these companies. Now, let's just go ahead. Once we've talked a lot about crypto here, I want to go ahead and discuss a little bit about what's going on in the macro markets. Now, one thing that I think is really interesting, and I haven't seen any headlines talking about, this is again where I think we stand out here in the channel. We really try to dive a bit deeper than what the headlines are saying, is what's going on in crude oil markets. Now, I know a lot of us have gotten real excited about the recent CPI numbers. I know a lot of people think that we've hit peak inflation. And while if the Fed continues on its current path, we could very well have hit peak inflation, the key thing I want to emphasize here is taking a look at the U.S. crude oil strategic petroleum reserves. We've started to, at the short term, flatline over the past few weeks since we started off the new year, really sitting around 372 million barrels of oil. For those of you who don't know what the U.S. Strategic Petroleum Reserve is, it's totally fine. To give a quick kind of rundown on it, this is a strategic reserve of crude oil that the United States in the past used to continually fill and depletes and utilizes, basically unloading this oil onto the open marketplace when there's a shortage of oil in order to contain prices. It gives them some negotiating power against major entities like OPEC Plus, against countries like Russia, other competing nations across the world in order to keep inflationary pressures cooled. And this has been a big reason why over the last year, even as we've had a shortage in oil prices and that therefore we saw an increase in prices in 2021 and 2022, we have now started to see some softening pressures since March due to the depletion of hundreds of millions of barrels of oil. However, in the near short term, as we've started to flatline here, when the government has stepped out of this and just tried to see what the market is going to do, take a look at crude oil's price here over the past 2 weeks. We've not only, throughout the entire month of December and January, held on that 200-week EMA, as we talked about here on the channel. We've had this highlighted for a good period of time since back in November. But on top of that, we had a move from $74 up to $81.65, just after a week or so of the federal government not diluting the market with excess crude. So think about this here, right? The government, first off, is not helping out anymore. We are likely going to be seeing higher oil prices. This is inflationary. It's showcasing that we have not done the job yet. We have not cooled down demand enough. But on top of that as well, if the federal government, in order to ideally maintain that same degree of, effectiveness in cooling down oil prices later on, they're going to need to eventually restock this, right? And this is one of the big kind of catch-22 situations that the government is in right now. If they add to the stock, and they definitely have some reserves, so I'm not saying this is something they've got to worry about right now, but if they want to plan ahead in case, other producers start to cut again, where they're going to have to start diluting this even more, they've probably got a year and a half worth of supply in order to stomach this. There's a potential worst case scenario where they're going to have to start adding to the reserve during these periods of time where oil prices remain relatively low. And this is why triple-digit oil prices could very well come back into the picture in 2023. If the Fed does not cool demand, if the federal government doesn't keep depleting their reserves right now, right, really just delivering it all in one stroke, all in one move, really getting the job done and forcing the economy into a recession, unfortunately, this could come springing right back. This is why inflation is not to be laughed at. It is not something to be trifled with. We really need to be serious about doing it right the first time. So it'll be interesting to see what happens at the next FOMC meeting next week between the 31st and the 1st of February. We're going to have to see what happens. But again, I don't know if we're fully out of the woods yet. Right? Natural gas has definitely looked a lot weaker here. Right? It's continued to cool down. We definitely might get some kind of short-term rebound of some sort. But generally speaking, for the most part, natural gas is showcasing that it's cooled down. There is definitely a good amount of deflation here in the cost of utility gas. But the question here remains whether or not the same will be said for oil. It is still where it was back during September of 2021. Excuse me, of 2022. My apologies. But you get the gist here, guys. We can't get too confident just yet. We've got to be patient. But anyways, that's it for the core part of the video, guys. But a big thing I want to kind of give as a takeaway is as we go throughout this period of time, we have to remain vigilant on the idea that inflation is not completely done. We need to understand that inflation is sticky. But on top of that, it doesn't mean that we can't start getting optimistic. I know a lot of people have asked me if I can start to dollar cost average, if it's time to maybe start buying some cryptos. And look, guys, to be honest, if you're DCAing, right, if you've been doing so for the past couple months, we've never spoken out against dollar cost averaging. The only thing we encourage here in the channel is to be passive about it, right? Not to go, if you DCA over the course of a couple of weeks and you dry up all your capital, right? That's not a good idea. It's best to definitely trickle in a little bit over time if that's something you'd like to do. And on top of that, during capitulatory events, go in heavier, right? The more we go down from top to bottom, be a bit more aggressive on it. But most importantly, there's also another path forward, and that's waiting for a clear trend reversal, right? It's not always about picking the bottom. It's about knowing when it's time to go long and take that excess risk, right? Be able to take on that additional risk when you can see that the trend is incredibly clear. So you don't have to sit around in a dead position with your capital when there could be other active trades being made in the market or other positions that may be outperforming crypto. I know that sounds crazy, but Bitcoin may not be the only investment you have to chase. There are other plays out there in the market. And we're going to be watching for them here on the channel because we're macro investors. We're watching every corner of the market, from equities to crypto to commodities to Forex. There are so many different plays out there in the market if you know how to look for them. And we're going to continue to watch them here on the channel. But anyways, I've rambled on a good amount here, guys. The big thing I wanted to let you guys know about is as we watch the altcoin market, one of the key plays that we're keeping an eye on here is Crixivia. Now, if you guys haven't heard about Crixivia just yet, they're one of the leading altcoins that we have on our plate here for the next bull market. We're definitely going to be keeping an eye on here. The key thing I wanted to share here, though, about Crixivia is that they had their recent beta launch back about a week ago. And the game has seen a lot of heightened success since that beta launch. Since Crixivia launched, there have been not only some really solid developments in the sense of the daily active users as well as new users coming on to the platform, but I really like seeing this retainment of new users coming back, playing the game, starting to farm some of those play to earn rewards. And not to mention, you can see that there's a good degree of stickiness here. There's a lot of people who are really enjoying the game, who are minting NFT collectibles in game. But on top of that as well, there's new exchange listings like the upcoming listing on Bitmart for Crixivia's token. Not to mention the overall interesting price action that's been building up since back in October. It seems like there's been a good trend of higher lows and higher highs. And to tell you guys what I look for, you guys heard it at the beginning of this episode. I look for those higher lows and higher highs. I look for that trend up move. This is why Crixivia is one of the few altcoins that with my own capital on spot market, just like anyone else, I bought a position in back in 2022, and I've continued to hold that position. I think that Crixivia or KXA is definitely going to be one of the interesting plays you guys should watch going forward into the next year. But again, as always, do your own research, play the game. And again, above all, if you guys don't want to invest in it, that's totally fine. But just definitely consider trying out the game. Give it a shot. There's no cost to it. It's free to play. You can run it on practically any computer device, and you can play it from your web browser or download the overall game client onto your computer. It's a really fun game. I definitely recommend you guys give it a shot. But that's it for today's video, guys. Definitely check out Crixivia at the link down below in the description. You guys can check out Bookmap as well. If you guys enjoyed this content, consider dropping a like. Consider subscribing if you haven't already. Thank you all so much for giving me some time out of your day to ramble on. And until the next video, have a wonderful rest of your day. Take care, everyone.